top stories as, of course, we look into the financial market space and the key players. Jubilee Allianz has appointed 4 new directors. Now, Jubilee Allianz General Insurance has appointed Mr. Timothy Masembe as its new chairman. Mr. Masembe, whose appointment takes effect on October the 22nd, is among other key appointed directors to drive the company to meet its growth and business strategies. Other appointments include Mr. Jime Douglas Mugerwa, Mr. Peter Chimbowa, both of whom have been appointed independent non-executive directors, while Mr. Paul Kavuma has been appointed the Chief Executive Officer. Mr. Masembe, who is also the managing partner at MMAKS Advocates, has been on the board as an independent non-executive director since 2010 and serving in different capacities, among which include chairman of the board audit and the compliance committee. The appointments follow an announcement in October last year in which Allianz acquired a 66% stake in Jubilee Insurance Uganda, while Jubilee Holdings retained a 34% stake. And of course, right now, as we speak, at 34% and 66% respectively, Jubilee Holdings and Allianz are in a partnership. Now, Allianz is currently present in 13 African countries, providing various insurance services. And in Uganda, it provides insurance service under individuals, which includes personal accident, motor insurance, travel insurance, and home insurance. Under the corporate insurance policy, it provides professional indemnity, all risk insurance, and group personal accident. In a statement issued yesterday, Jubilee Allianz said the appointments will seek to enhance and maintain its strategic growth. Mr. Kavuma has extensive experience in insurance, having worked for more than 24 years in both insurance and brokerage. Prior to joining Jubilee Allianz, he was the chief executive of Uganda Insurers Association and has previously worked with AIG Insurance and AON Insurance Brokers and Gold Star. Mr. Mugerwa and Mr. Chimbowa are seasoned business executives with years of executive leadership. Now, if you recall, Jubilee Allianz, actually was one of the insurance companies that actually made a lot of profits when it came to insurance. And the insurance companies usually work hand in hand with financial service providers. Looking at, for example, Sanlam Investments, who offer financial services like the unit trusts or collective investment schemes. They also have an insurance subsidiary. But now Jubilee Allianz, of course, will now be looking at mostly insurance, but we will also look at it in the perspective of what it could offer in terms of financial markets. As you know, you cannot do insurance without financial markets, and definitely the company will be put to task to see that they grow the financial markets as well and see the growth of the insurance sector business as well in Uganda. Moving on, Bank of Uganda is set to start regulating SACCOs. Now, the Bank of Uganda has said it is developing guidelines that will formalize its regulatory mandate among selected savings and credit cooperatives, that is SACCOs. In its annual supervision report published early this month, the central bank said it was working with the Ministries of Finance and Justice and Constitutional Affairs to develop the microfinance deposit-taking institutions or registered societies regulations 2021, which will pave way for the supervision of registered societies, otherwise known as SACCOs. Once finalized, these regulations shall operationalize the amendments to the Tier 4 Commercial Microfinance and Money Lenders Act 2016 and pave the way for the supervision of select registered societies, that is SACCOs, by the central bank. The financial sector in Uganda is subdivided into 4 tiers, with composition under Tier 1 being commercial banks, while Tier 2 is composed of credit institutions and finance companies. Tier 3 is composed of microfinance deposit-taking institutions, while Tier 4 is composed of SACCOs, that is the savings credit corporations, non-deposit-taking microfinance institutions, self-help groups, and community-based microfinance institutions. Now, all financial institutions under Tier 1 to 3 are regulated and supervised by the Bank of Uganda. And the Bank of Uganda guidelines shall, among others, provide a licensing regime detailing the structure of annual fees and renewal of license, publication of SACCOs, and circumstances under which a license can be revoked. Under Tier 4, that is the Microfinance and Money Lenders Act 2016, a SACCO shall not carry on the business of financial services unless it is registered and licensed as a society. The Act also prohibits SACCOs from providing financial services to non-members, while mobilization of funds from members and borrowing shall be guided to an amount that does not exceed the allowable limit. It also notes that a SACCO shall be registered after it has provided a number of requirements, among which includes a certificate copy of the certificate of registration, evidence that the SACCO meets the minimum equity requirements, information on the prospective place of business, evidence of payment of the prescribed fees, the statement of the objectives of the registered society, and evidence of membership and shareholding of its members. Other requirements include a statement on the economic and financial environment of the SACCO, organizational structure and management, a business plan, credit policies, and lending procedures. The Tier number 4, that is the Microfinance, Money and Lenders Act, was derived from the amendments to the Microfinance Deposit Taking Institutions Act in 2003, which introduced the phrase registered society to mean cooperative society registered under the Cooperative Societies Act. The amendments require such registered societies or SACCOs, which intend to provide financial services among members, to formally write to the Bank of Uganda for a license if their voluntary savings are in excess of 5.5 billion Ugandan shillings. Mr. Moses Kagwa, who is the Ministry of Finance Acting Director of Economic Affairs, told one of the papers that large SACCOs shall be regulated by Bank of Uganda, while others will be regulated by the Microfinance Regulatory Authority and the Registrar of Cooperatives under the Ministry of Trade. And of course, he says it is difficult to estimate the number of SACCOs in Uganda, given that many of them are not registered. According to Tier number 4, Microfinance and Money Lenders Act 2016, a license shall indicate the location of the operation for which it is issued and the issuer, will take into account whether the SACCO will be operated responsibly and the nature and sufficiency of the financial resources of the applicant and the effectiveness of the business plan submitted by applicant for the future conduct and development of the business of the institution. That is, of course, Bank of Uganda coming up with a structure that will enable SACCOs, or the saving corporations in our villages, in our societies, in our workplaces, to be regulated, probably for better, more efficiency, and making sure that the money is safe and sound for the people in these SACCOs. Now, important when now we are away from the system of keeping the money in a box and then giving it to someone to keep it at their home, and then probably this person can wake up and run away with all your money. You can invest this money in several assets. You could invest it in safe assets, you could invest it in risky assets, depending on what your goal is as a SACCO. But personally, I would think that since now the Bank of Uganda is regulating the savings cooperative societies, then definitely they would be handy in giving financial advice to these SACCOs to see that they are well led, and the monies that are handed over in these SACCOs are well managed by the leaders and trustees of this money. Take an example of having a SACCO and your manager, probably the person who gets the money, the treasurer probably, dies, and probably they put the money somewhere no one knows. Yeah, definitely these are some of the problems that many SACCOs find. But right now there are various opportunities that you can take hold of. Investment in collective investment schemes and unit trusts can be of help to the savings cooperative societies if at all they are considered and people are educated about these and more. Of course, here we will give you advice on exactly what to need to know if you're a SACCO and you want to start investing. What can I do? Can I invest in the treasury bonds? Can I invest in the unit trusts? Can I invest in the bills? Do I invest in the equities? Definitely, this is the place where you will find such information and nowhere else. Now, let's move a little bit away from the SACCOs and move to the National Social Security Fund, where the director, Mr. Richard Byarugaba, the NSSF Managing Director, says that 90% of NSSF contracts are executed by local companies. Now, at least 90% of the National Social Security Fund contracts are executed by local suppliers, according to Mr. Richard Byarugaba, who is the Managing Director of the NSSF. Now, speaking during the NSSF 6th Suppliers Forum in Kampala, Mr. Byarugaba said that only 10% of the fund's contracts are executed by foreign firms, with majority of the contracts going to Ugandan suppliers. He said that their procurement report for the year 2021-2022 financial year indicates that local firms receive 90% of the business from the fund, while only 10% goes to international firms. However, he said that whereas Ugandan suppliers receive the largest percentage, there was low uptake of high-value contracts by local firms because of inadequate financing capacity and low technology adoption, price fluctuation of materials, and inadequate skills, among other reasons. Therefore, Mr. Byarugaba noted that there was need for local suppliers to develop long-term business strategies that go beyond just participating in tendering to skilling workforces and enhancing engagement to complex projects. This, he noted, could be achieved in the short term by establishing partnerships that will help suppliers understand why they failed to win a bid. Now, NSSF, he further revealed, in its 10-year strategic plan, will leverage on innovation to grow the fund, key among which will involve extending coverage of the fund across the country at a low cost, improving member experience as well. NSSF will, during the 2022-2023, have a budget of more than 1 trillion Ugandan shillings, for which Mr. Byarugaba said local suppliers must compete to tap in. The fund will, during the period, spend 546.9 billion Ugandan shillings on real estate and 21.1 billion shillings on IT, systems and computer equipment, and 2.4 billion furniture, fixtures, office equipment, and 0.051 billion on motor vehicles. Mr. Byarugaba also indicated that NSSF had put in place initiatives that will support local farms to build capacity and competitiveness for better business opportunities. The forum is a platform which NSSF updates suppliers on its programs and business opportunities. National Oil Company Chief Human Resource Officer said that local suppliers must develop capacity given the increase in the opportunities in the oil sector. For instance, she said investment opportunities for the local suppliers stood up to $8 billion in Kingfisher and Sunok, with at least 17 projects reserved for the local suppliers. That is, of course, NSSF there declaring that 90% of its suppliers are domestic, and of course only 10% are foreign. But of course, due to the lack of technological advancements and price fluctuations, the 10% is usually for the high-end projects. You should remember that NSSF is one of the biggest investors, if not the biggest, in the capital markets and financial markets of East Africa. Recently, when the Umeme company released its financial results and declared a dividend, they declared that the most, between 23 and 25% of the shares that are publicized in Umeme are actually owned by NSSF. And several other companies across the board, and it's one of the biggest investors when it comes to the region as East Africa. And definitely these people collect funds for retirement and help people to have a good retirement and have return on their retirement savings. So you're saving for retirement, but there's a little return that comes with that as these guys invest on your behalf. And very many people have learned how to invest due to NSSF. Many businesses have started after NSSF, and I think it's one of the financial institutions that you could say, it's not a financial institution, but it's one of the institutions you can say is actually doing very good when it comes to saving and investment. You cannot overlook NSSF if you're talking about saving and investment in Uganda. And as well, if you also remember the Uganda Retirement Benefits Regulatory Authority, UBRA, which is in charge of regulating all these pension saving schemes, it has NSSF as one of its top, if not the top most scheme, where people are saving quite a number of monies. And so by the time these bodies are entrusted, it's because they have stood the time, the test of the time, and they know exactly what they're doing. And that's what we want to do at an individual level. If you can start saving on your own and investing wisely, you could be like NSSF as well. You could save for your retirement, you could save for building a house, you could save for anything. So long as you're putting money aside and investing that money wisely, definitely you will be better off, and you will have returns come in handy to your wallet or to your bank account without even a single input of your energies. That's exactly what NSSF does. Investing people's savings for pension and giving them return in the end. And definitely with some adjustments in the regulations at the Uganda Retirement Benefits Regulatory Authority, right now you can access 50% of, you can access 50% of your benefits before your term expires at as a security or a collateral for a mortgage loan, which is a home loan or a mortgage to build, renovate, or reconstruct a house that is a home where you can stay. And this is the beauty. But you must have saved, of course, with the fund for at least the past 10 years. And those are some of the conditions. But these are all opportunities to use. And remember, equities are used as security. It's not just NSSF and UBRA doing all this. Definitely, you can use your equities, you can use your bonds, you can use a couple of things as security, as collateral so that you can actually access a loan from a bank. And this is exactly what NSSF has done to avail 50% of people's saving for security as security for a mortgage loan or a home loan for renovation, for construction, or reconstructing a house for your retirement, so that you actually have somewhere to stay before you retire. And it's very unfortunate that you retire without a home. It's quite unfortunate, and I think this was very thoughtful, thinking about it from a financial strategy perspective. Okay, we are 24 minutes, of course, past the hour of midday. We're going into a short break. We return with our last segment. We'll look a little bit into the cryptocurrency world, how it has fared, and also into the foreign stocks, how they are fared, but also how crypto meltdown affected Kenya in terms of the meltdown that happened about 1-2 weeks ago in cryptocurrency. We'll be right back. Don't go anywhere.